Hey guys, Stockaholics, thank you guys for being here today. Last time we talked about shipping cycles. In the last video, I mostly talked about long and short cycles, and I also took a look at a history of tanker cycles. So if you're interested in that, I would highly recommend checking out my last video. It might also provide some more clarity and context for what I'm going to talk about in this video. In this video, I'm going to mostly focus on something I've been thinking about, that is the 90s. And since the 90s, and some of the phenomenon we've seen with ready access to public capital in the shipping industry. And then I'm also going to be talking about my position on tankers, some things that I see that are very good in the industry, and some things that I don't see that are good. So if you're looking for a perma tanker bull, I'm not it. I'm here to make money. So here we go. All right, a few months back, I shared this. This is kind of basically how I saw a company, DHT Holdings, and basically the way that I saw share prices were in three kinds of ranges with this stock. There was an elevated range, and you can notice that that would happen through these kinds of extrinsic events. There was an oil glut that took place from 2014 to roughly 2016, and then there were two things that happened in 2019 and 2020. We saw the Costco sanctions from President Trump. This is a very relevant event to me because this shows me approximately how many ships that I want to see removed from the fleet to keep in mind a base supply and demand. So we saw roughly somewhere between 100 and 150 large tankers removed from the fleet, and we saw, as a result, high rates. So that tells me that those are around the range of the ships that we want to see removed from the fleet. And we also saw there was a huge spike with the COVID contango situation that took place last year. Now, if we look at these, one of the things I had to go and reevaluate thinking about is when I look at the historical cycles for tankers are in terms of these extrinsic events, right? So if we go back and we look at these shipping cycles, you know, there's a certain period of time. We remember that they take on average somewhere between 4 and 7 years. If you think about this, this looks very similar to that shipping cycle that we see in the textbook example, right? Now, it is highly volatile, but I would suggest that what you see here is a peak, and what we see here in 2020 is also a peak. Now, that doesn't mean that another extrinsic event can't come around that will, you know, cause another huge volatile spike, but in the near to medium term, there's really nothing that we could say that is going to lead to an immediate bull cycle. There's going to have to be a depressed range for the next cycle to take place, in my opinion. The reason for that is because we know that we have an oversupply of vessels. We want to see a roughly 100 or so vessels removed from the fleet. And what we're not seeing is scrapping that commensurates with how many ships are being added to the fleet. We're still seeing tanker owners add ships, and we're still not seeing the scrapping levels that we want to see to achieve that 100 or so ships being removed. Now, that doesn't mean that, you know, oil demand couldn't pick up, and there are also some unknowns that I think that that aren't really well understood yet. One of the things we also noticed that happened last year was the refineries. There's a lot of refineries that got shut down in the world. So we really don't know. But if you listen to the tanker executives, they'll let you know how excited they are by that. I don't necessarily take their word for it. So to me, the effects of that are still unknown. So if we see big rates happening in the wintertime this year, then that means that there is a positive development from that. If we don't, then it means very little. So that'll be something we have to see. But as it stands now, with lower than average oil demand, I am not particularly excited with tankers, especially when we realize that we just went through a peak cycle in oil tankers. To kind of illustrate what I was thinking, there's a guy named Harris Kupperman, I believe is his name. He was on a recent interview. I'll post a link somewhere to the full interview if you're interested. But he's been following tankers for a long time. It's something that he's very excited about. And basically, he's saying the same things that I've been noticing, that we are seeing tanker owners, what they always do when they got money, they're buying ships. And what are they doing when they're still optimistic and they're bullish on the industry? Well, there's a lack of scrapping. Now, on the one hand, you're starting to see articles come out that are saying, scrapping levels are picking up. Yeah, they are, but there was like for the last couple of years, there's almost no scrapping. So they're elevated compared to the years before that. But if you look several years back to like 2017, 2018, there was a lot of scrapping taking place. And for me to get excited in tankers, that's what I want to see. But anyway, I want to show you this clip to kind of illustrate my point.
Maybe lithium too. I don't know.
Got it. And when you talk about tankers, sort of what would be the catalyst for you to jump back into the tanker trade? And what is it that actually drives tanker prices, like tanker stock prices?
Well, I mean, earnings drive pricing, and charter rates drive earnings, and supply and demand. It's like any other cyclical commodity, and you need either massive increases on the demand side or shrinkages on the supply side. And we know there's a lot of vessels on order right now, and that number keeps growing. And so you need, the demand side to pick up. And I don't know, I mean, it's going to pick up again because OPEC will go back to full production. And if they're going to ban oil, like oil drilling in the United States, like America's going to need more oil. But there's a lot of supply coming too. It's just, it doesn't line up. I mean, remember what I said, a few minutes ago, this investing thing is very easy. When you look at something, it should be just, blindingly obvious. And if it's not, and you have to really think about it, you have to do a lot of research, then it's too hard. I put a lot of stuff in the too hard pile. You could call me lazy maybe, but I just know that if it's not obvious, within about 5 minutes of hearing a thesis, I could go, that sounds really good. Let's just check if it's, factually accurate. But if it is, let's do it. Let's do it big. I don't do 1% positions really. I'm going to play 5 minimum, and I like to put on 10 and 15% positions. So you end up with 5 or 10 names in a book, so you can't make mistakes. But it also means it keeps you disciplined. But it also means that you're really going to chase your best ideas, and it has to be blindingly obvious. Like all the stuff I put on the last year, it's just obvious. And tankers doesn't seem obvious. Tankers, this works. I don't know. It's too hard. I mean, will the price of oil be higher in 2 years? Well, yeah. You have the 3 largest oil companies in the 3 largest publicly owned oil companies, Shell, BP, Exxon, and now Chevron, all basically have been told by different authorities to stop doing their business. Like what do you think is going to happen when they can't do their business anymore? There's going to be a shortage. And what do you think happens if you stimulate too much? Demand's going to pick up. Right now, the demand pickup is lagging in jet fuel because people aren't flying. Well, that's going to be fixed in 6 more months, and then there really will be a problem.
All right, so this was from my last tanker update video that I made. And this is the new orders of tankers. This was from Clarkson's. And one of the things you notice this year we're still, even though that there's been depressed rates for approximately 9 or so months, almost a year now, there is still ordering taking place. And it kind of goes in the face of what a lot of tanker executives will say, is that the order book is low because the IMO regulations and tanker owners don't know what to order because of those. Well, if you just go and take a look at the order book since 2021, maybe it's a little bit lower than the oil glut years, but it's maybe there's a shred of truth to that. But the order book, they're still ordering lots of ships, and if you compare that to the vessels that are being scrapped, they're higher. So the supply is increasing of vessels. The demand for those vessels is still low because we are below 2019 levels. If we get beyond the oil demand for 2019, and that will happen eventually, and let's say that pairs with increased scrapping, there is an opportunity there, but that's just not what we're seeing yet. All right, so this is Frontline. I wanted to, and by the way, there's been a lot of bearish stuff here all at once. I know a lot of people watch these videos are tanker bulls, so there is going to be some bullish stuff coming a little bit later. So if you're looking forward to that, I still believe there's going to be a bull cycle, a demand-driven cycle for tankers, but there has to be some pain for that to happen first. So here, first of all, I wanted to look at a company called Frontline. So Frontline, what I find is very interesting is Frontline is one of the companies, one of the first publicly traded oil tanker companies on the market. So, and what I always kind of look at is Frontline to kind of look at the cycles in tankers. Now, one of the things you'll notice, first of all, when this company first went public right after the dot-com crash in about 2000 or so, 2001, 2002. I'm not sure exactly when this, about there, when this company went public, right? You'll notice what happened after that. This right here was the super cycle that took place from 2003 to approximately 2008, where there was just massive increases in demand for oil tankers because there was just massive oil. These countries that were growing and developing, they really needed that oil, right? So if you look from that last video, a lot of the things we were talking that characterize a lot of cycles were unpredictable extrinsic events. So that's one thing that I had to go and reevaluate. But I don't, because I always assumed that it would be something like this super cycle that really is the things that you would want to invest to kind of capture, right? But if you look past for 100 years, most of the cycles were just supply-driven events where there was just something happening in the world that caused ton miles to have to go up dramatically, or that characterized those cycles. And maybe you want to invest for one of these things. For me, I can't, because it's just the business is shitty most of the time, right? For me to invest for the potential of an unpredictable, unforeseen event, another black swan kind of happening, it's just like I got better places to put my money. So when I invest in tankers, these are the kind of moves that I would like to capture. These are the super cycle events, right? But I wanted to mention Frontline because you can kind of use it as a historical measure, since it's one of the longest trading public tanker companies, right? So Frontline has its origin in Frontline AB, which was founded in 1985, and it was first listed on the Stockholm Stock Exchange from 1989 to 1997. Eventually, it was transferred, and a company indirectly controlled by the largest shareholder and chairman of Frontline, John Fredrickson, became the largest shareholder of Frontline in 1996. In May 1997, a decision was made at the general meeting in Frontline AB to change its domicile from Sweden to Bermuda and to list its shares on the Oslo Stock Exchange. The change of domicile was executed through a share-for-share exchange offer from then newly founded Frontline in Bermuda. And this is the Frontline that is still publicly traded today. By the way, I don't own Frontline, but I really like looking at this company to kind of gauge prior cycles. Same thing, you can kind of see these bumps in each of these cycles down here. One of the things you'll notice when we're looking at the share price of Frontline, these extrinsic short-term events just completely pale in comparison to the things that I'm trying to look for in shipping, are these demand-driven events. All right, if we look at shipping for the most part in the past, it's historically been a cash-driven business. So, but that started to change when you started to see companies like Frontline. Since the 90s, like is the case with that company, many shipping companies have been publicly traded. When you looked at that super cycle that we saw, there was a lot of companies that got added to New York Stock Exchange where you could publicly invest in these shipping companies. So this also means that since then, since the 90s, something that was more historically a cash-driven business has had more readily available access to capital than would otherwise have historically been something that would be more historically difficult to acquire. So when you think of these shipping cycles where the average duration was somewhere between 4 and 7 years, the you know, eventually there'd be these boom and bust cycles. But if you're constantly accessing public capital, one of the things that I've been thinking about recently is how this can be affecting the cycles. And I really think that this has the potential to be elongating these cycles, where there's a lot of businesses that probably should be going bankrupt that don't. And the market should be so bad for a while that would lead to scrapping. But because they have access to your money, and I'll show you an example of some of these companies in a second, they can stay in business when historically they would not, right? So when in the past these companies would have gone bankrupt and these excessive vessels, I think, would have likely ended up in scrapyards. So I think this phenomenon, this ready access to public capital, which we've seen in the 90s, is likely increasing the duration of shipping cycles. So this is a hypothesis. I don't have any way to prove this, but I think that this is probably true. And the way that you can kind of see this is if you look at this company. So let me move myself, first of all. Move myself over here for now. This is a company called Tsakos Navigation. They are a publicly listed Greek shipping company. And if you go and look on their website, these are one of the things that you see on their site, right? They're super proud of this, this thing that they can do. They say, we are a counter-cyclical asset investor. So what that really means, though, is that if you're investing in them, that is a dilution machine. You are investing in a company that is, regardless of the rates that they're earning, regardless of the cash flow, they're going to be buying ships. So where do you think that they're getting the money for those ships? You. They're going to create more shares, and they're going to use the capital that didn't exist in the past from investors to go and buy new ships. But what does that lead to, right? This all looks great on paper, but when you're in a shitty market and you're adding new ships to the cycle in that trough, you're extending the trough. You're drawing out the possibility of good earnings. Now, this is great if you're interested in cheap shipping around the world, but it's really bad if you're a shipper, and it's really bad if you're a shipping investor, right? And these are the kind of things that I look for in a shipping business that I don't want to own. I don't want to own companies that are doing this, right? So not investment advice. If you guys want to own Tsakos, go ahead. But these are the red flags for me. So this is their modern high quality fleet. So they own a fleet of modern, versatile, high quality tankers that are designed for enhanced safety and low operating costs. Over the past years, they've committed and undertaking a massive new building program, regardless of the cycle that you're in, right? Thereby renewing their fleet at your cost, which currently stands out as one of the youngest tanker fleets in the industry. We believe that increasing stringent environmental regulations and heightened concerns about liability for oil production have contributed to a significant demand for our vessels by leading oil companies, oil traders, and major government oil entities. And if you look at rates, that's just total BS. That's not true. Tsakos Columbia, and the technical manager of our fleet, is certified in accordance with blah, blah, blah. All right. So if you're looking for a company not to own, not to invest in and again, this is an investment advice to your own. This is something that I wouldn't purchase, because what this means is when they're counter-cyclically investing, not only are they prolonging the down cycles, but they're they're diluting you as a shareholder to do it. So these are kind of some of the things that I've seen that I think they're just kind of freaks of nature. They, in a normal historical shipping environment, these kinds of things wouldn't exist. So if you and for some reason they all come from Greece. So I don't know why the Greek shippers are so bad, but they are for some reason. So here's one of those companies. It's called Top Ships. No offense to you if you own this company, but if you look at this graph, at one point at no point was the share price $4 trillion. That would be probably the economic output of Greece total in an annual year would be $4 trillion. The share price was never that much. But there's just been so much consistent poor earnings in this company, subsequent available to capital that they probably shouldn't have, and just constantly been diluting and diluting and diluting shareholders at the expense of keeping their business, their lights on when they should be bankrupt. Same thing with Synergy. And by the way, I think these guys are about to present at one of these shipping conferences I was looking at. And just don't. These guys should be bankrupt, man. Look at this. This constant dilution. It's a constant. It's one of those businesses that's completely at the margins. They shouldn't exist. And if they didn't exist, then the shipping cycles, I believe, would be shorter, right? So historically, these marginal shipping companies would have gone bankrupt. But when we have a look at some of these listed shipping companies, you can see these companies can survive well past their expected lifespan due to renewed investor support and capital raisings. I think these increase the duration of these shipping cycles compared to the past, and we probably need to see slowdowns in the global economy and a decline in investor capital to kind of eliminate these trends, to get these abominations off of the market. All right, you guys had enough of the bad news yet? Here's the good news, okay? Now, when I was thinking about the super cycle that took place from about 2003 to about 2008, it was a demand-driven event. And again, there's these extrinsic events that have characterized a ton of cycles in the past. It's just not something that I can get involved in the shipping industry to kind of capture because I can't predict it. And it just, in the short term, it's a bad business. But I do think that there's going to be another super cycle at some point. And this is to kind of explain why, right? So the last super cycle was characterized by rapid expansion in the BRICs. This is from the IMF. This is the projected GDP growth in 2023 from various places around the world. A lot of these places in the dark colors are GDP growth that's anticipated in excess of 6% or more. A lot of these very dark green countries in the world, some of those are anticipated to have GDP growth in double-digit percentages. And what that translates to, despite a lot of Western narratives and electrification, this is really going to be an increase in oil demand, right? So the question is, will this lead to another super cycle? And I think that it will. And I'll show you why on this next slide here. Okay, and here's why, right? The countries with the highest GDP growth, they have insufficient local oil demand or oil reserves available to them to meet growth needs. So what that means is that oil is going to have to be transported to those places in order for them to continue to grow. And that will happen regardless of the Western narrative, right? And if you look at Africa, everybody thinks that this is I don't want to say everybody, but a lot of people think this is a backwards place in the world. And that is rapidly changing. I hate to burst a lot of people's bubbles, but the growth that you're seeing there, it's really changing, and you see that when you look at the projected growth there. Now, to achieve that growth, that oil is going to have to be imported there. Same thing with a lot of South America. Venezuela, it could, maybe supply a lot of the growth that you're going to see in some of these places down there. But currently it's a defunct country. So what does that mean? That, likely in the next few years, that's going to have to be either transferred from the US, but more likely the Middle East. And what does that mean? More ton miles, right? And what's one of the other places, just like the BRICs of the past, India and China are still rapidly growing. China does have some oil reserves, but nowhere near the reserves it needs to achieve its goals. And India, almost none, right? So it's also going to be importing oil. So a super cycle is going to happen. It's just a matter of when. And you think about what happened in the last one from 2003 to about 2008. There was a tremendous amount of vessels that hit the market all at once, right? The whole time up, what were the shippers doing? They were ordering vessels. Well, it's been almost 20 years, and the lifespan of a lot of these vessels is going to end up in scrapping age in the next few years. So what does that mean? When all of these vessels are reaching scrapping age at the same time as you're going to see growth in a lot of these countries and an increased demand, the inevitability of a super cycle is guaranteed. regardless of what people think. It will happen. It's just a matter of when. But I don't want to be holding tankers until that happens, because like we saw in the last few ones, there's a lot of dilution machines, and we want to see pain. We want to see these guys scrapping vessels. We want to, when we think back to that first video, we want to see that checklist of about 6 things. We want to see capitulation. That's one of the things that will get me excited, when you start to see these tanker owners really taking action to cause the next bull cycle to take place. But right now, what they're doing with a lot of their actions is the opposite. They're delaying it, and they're delaying it at investors' expense in many cases. Anyway, I hope you guys found this information useful, and I hope you guys have a great rest of your week.